Hey guys, how's it going? Good afternoon. Let me go and finish setting this room up real quick and then we'll get started with our session for the day. That's good. Solid. Take this off. All right, cool. Let me get this link sent out to you guys here. Bring it real quick. There we go. I'll let people make their way into the room real quick. All right. All right, guys, good afternoon, everybody. Today is our weekly group mentoring session. So if you guys have any questions, feel free to drop the questions in the chat and I can answer whatever you guys need help with. As I mentioned before, this session is pretty much all for you guys. So I'll be on the session until you run out of questions. But I'll try to get as detailed and as concise as possible. So if you guys have any questions regarding any of the strategies, any of the concepts, I mean, anything really, if you guys need help with anything, lot sizing, risk management, this is definitely the session to put down all your questions. So I'll give it a few more minutes for people to join in. It's 2:03 right now. So we're just getting started. So if you guys are just joining the room, you guys are not late. We're literally just starting the session right now. So whenever you guys are ready, feel free to put your questions in the chat and then we can go over whatever you guys want me to cover today. Let's see. Let's see if there's any entries here. So throughout the day today, there's a lot of the news going on. I'm sure you guys are familiar with, what was going on with the Republican conference, also the Democrat press conference, also the war, not really the war, but there's just a lot of things going on today behind the scenes that could have affected the market. So that's why we kind of stopped trading right after the live session. I mean, you guys could have probably caught some buys over here, maybe not on the 5-minute, but it looks like on the 1-minute, there were actually a lot of entries that came up after we even got off the live. I didn't catch anything else. I just, pretty much called it a day because I didn't want to get caught in this, these whipsaw movements that were going on. Like, as you guys can see right here, we got off the live round here at 8, but if you followed it, it kept pushing along. It also hit a lot of liquidity here. I know Rick was messaging me. I don't know if he's on here, but I know Rick was messaging me about the possible mid-market reversal, and it played out pretty nice for a sell here. It kind of went both ways. It swung down and then it swung back up after it hit liquidity in the other direction. But yeah, I mean, if you guys have any questions, feel free to put your questions in the chat. I don't have anything right now, so I'll just be waiting for anything to pop up. All right, cool. So we got one question here from Mauricio. Mauricio is asking, hey, Sean, thanks for doing this. If you can go over any updates on the V3 strategy, do's and don'ts. So for the most part, for the V3, I know we've been going between the 5-minute and the 1-minute. I'll put the strategy here real quick. So basically for these requirements here, these are going to be probably the main requirements. One thing that we're probably going to be including, not just for the V3, but for everything, is to have a bias. I know for the past couple of weeks, past couple months, we didn't really use a bias because we were testing this um, pretty much openly to see, how well it hit. It did work really well in both directions. It still does work very well in both directions. So um, if you want to trade risky, I mean, you guys are welcome to trade without a bias. But I think for moving forward, I'm definitely going to be using a bias because I don't want to be taking anything too risky, especially on live. I don't want you guys to be losing any trades. So that's probably one thing to keep in mind. Obviously, you guys know from the bias, there's going to be a couple of things that we'll be looking at. It'll be retail sentiment first. This whole week or these past couple of weeks, there hasn't been much of a bias here. It looks like they're starting to develop some sort of bias. It's 60% short right now. So as you guys are aware, there is inflation news coming out tomorrow. It's CPI news and core CPI on, wait, was it today? It's actually on Thursday. Okay, so on Thursday, we have CPI and core CPI. So inflation news is coming out on Thursday. Tomorrow we have crude oil inventories, plus we had Fed member Bowman speaking. So we got some news tomorrow, not a lot, but with Fed members speaking, they're going to be discussing the economy here in the US, obviously. So with that said, this is probably going to push price, one direction or the other. With more traders joining the short side, we'll probably have a bullish bias tomorrow if this stays above 60. As you guys know, everything here, we follow retail sentiment, then we follow fundamentals. Obviously, if the market's closed, we can't look at the average. You can see here, it hasn't been updated in the past hour or so. So you'd go over to, or this hasn't updated either because the market's closed. But if you were to check, it'd always go from retail sentiment to fundamentals. If none of these really line up, then you go over to technicals, which is what we've been using for the past couple of weeks now, because there just hasn't been much of a bias with regard to both retail sentiment and fundamentals. So that's the order that they go in. Obviously, retail sentiment first, fundamentals, then technicals. But yeah, I mean, for the most part, that's pretty much the biggest update for the V3, Mauricio. I'm not sure if there's anything else that we're looking at. I know we were using divs for a while, or not even for a while, maybe for like a day or two. While they are somewhat useful, I wouldn't depend on them too much because, as you guys noticed, or maybe not everyone, but a lot of the div entries that came up yesterday, they all lost. So that goes to show that they're not really that important, right? They're good for a final confirmation in some instances, but they're not a deciding factor with whether I take a trade or not. So I'm not really using the divs very much. I'm also not really using the order blocks very much either. I know we kind of looked over order blocks and divs the past couple of days. A lot of people have been asking me about it. I just don't find them to be that useful. I mean, they're useful, but they're not like the end all be all. Like you can't necessarily depend on them. And just because there's a div there, I wouldn't take the trade. And the thing with adding too many requirements is that you're going to miss out on a lot of trades. Like, for example, if you see, let me see if I can find an entry here. So if you see an entry here, okay, so there was a buy right here, right? So let me just go back to here real quick. And I know a lot of people are starting to depend on the divs, which they're not really that. Let me turn this on real quick. So there's no div there, right? You can see there's no div there. Some people will depend on that. They need the div there. So if you were depending on the div, you would have skipped this trade here, even though it would have been a perfect trade. Because if you took it, I'm not going to set the TP stop loss, but I'm just going to show you guys, if you guys took it, it would have hit, right? But if you're too scared to take it because the div didn't line up, you would have missed out on a great trade. So these are going to be used as extras. I mean, the divs they're useful, but they're not, I'm not going to depend on them too much. Same with the order block. Some people like to use order blocks. Let me see if there's an order block there blocking that entry. Let's see, let it load up real quick. Okay, so there's actually an order block from the bottom. So this probably would have helped because it looked like price was bouncing off the order block. So, as you guys can see here, sometimes there'll be, if you guys depend on too many things, the thing is we already have a lot of requirements for the V3, so I don't want to add too many on there to prevent us from entering any trades. But I know a lot of people have been asking about order blocks. A lot of people have been asking me about divs. They're not really necessary, guys. I mean, you guys can use them, but one thing that you guys want to keep in mind is that these indicators, specifically the order blocks. A lot of people are asking for specific order blocks. There is a, they're very subjective. So there's no specific indicator that I would recommend, because the thing is, if you match different order block indicators, they're all going to tell you something different. So to be on the safer side, I would probably actually understand how order blocks work. You know, you can just go on YouTube, and there's a ton of videos here. Let me see if I can just, and this is how I learned all my trading, guys. It's from YouTube and just different forums. I learned everything on my own, never had a mentor, never took a course. Literally, you can go on YouTube and just search up order blocks. Right? You go here and then you just watch different videos. You just see how people explain it. People explain them differently. So one thing that you can do is you can watch different videos, and then you can compare and contrast the videos. Like you can say, oh, this person said this and this person said this, and then they'll all make sense to you one way or another. And from there, you can start to develop your thought process as to how do you identify order blocks. So that's one way to do it. And you guys got to be okay with making mistakes and learning from them. The main thing with trading, guys, is that I see a lot of people fail to do is, like, you guys don't want to make any mistakes. So like every time you guys ask me a question, you want like a definitive answer. The thing is, there's no definitive answer to anything, guys. You have to make mistakes, and you have to learn from them so that you understand how to use your logic in the future. Like, for example, whenever something goes wrong in the market, I can kind of use logic to figure out what happened there, right? If there was something that was in the way, if there's a support or resistance, if, you know, we're trading against the trend, if we were going against the bias, if there was news during that day, this all comes with practice. It's not something that you learn overnight. So I know there's a lot of traders out there, or a lot of new traders who are trying to be the best trader ever, and they've barely been trading for like a couple of days, a couple of weeks, a couple of months. You know, I've been trading for a long time, and I've been trading for over 6 years now. Well, close to like, well, the first 4 years are probably like I didn't know anything, but trading full time, I've been trading full time for maybe about maybe 5 or 6 years now. Not necessarily full time, but full time, maybe 4 years. But trading like as not just the hobby, probably 5 or 6 years. So, you know, it takes time for you guys to really learn these things. So don't don't feel discouraged if you guys don't get it right away. So let me go over here real quick and see what else is here. But yeah, pretty much, Marie, so that's pretty much it. Just trading with a bias, that's the main thing. I wouldn't really include any of the other confirmations that we've been using. Like, I'm not going to add order blocks or divs to any of the requirements, because those are just too much. It's just way too much. Like Jonathan said, analysis paralysis can come into play too much if you look, if you're looking for too many things. And I agree with that too. You guys got to keep it as simple as possible. You guys are going to run into losses. It's impossible to just have a 100% win rate. I know we had a like 100% win rate for like the past, I think like 6 months or so, but you know, once you come into losses, it's going to happen. You just got to bounce back from it and don't get stuck in a hole. So let me scroll up real quick and see if there's any other questions. Victor or Whitney's asking, do I trade on the Mac? Yeah, so I do. I trade on the Mac. I'm using an iMac Pro, the desktop. So that's what I use for my trading. I've always been trading on a Mac, and it works fine. I know a lot of people don't like using Macs for trading, but I mean, I've been doing everything on a Mac and it's been fine for me. So it's fine if you guys want to use a Mac. Obviously, PC is going to be a bit more powerful, or you have more options, but I do have everything on my Mac. I have MT4, TradingView, pretty much everything. Yeah, it's just a lot simpler. And the thing is, I have a high powered Mac. So, I mean, my Mac runs just as good as any other PC. Scrolling up real quick, let's see. Talanji said, do you recon? Oh, sorry, reckon. I thought you said recon. Talanji, do you reckon there'd be a good chance market is slowly making its way back to all-time high? I've been using RSI for div all last year. Don't even need it. Yeah, I mean, you don't really need it. I use the RSI too. If you guys aren't familiar, there's different ways to identify div. Div just stands for divergence, guys. So like, for example, if you're using a basic RSI, what I would use here is I would just use the baseline. So like, man, I don't even remember how I used to, okay, so I used to do this over here. The middle band was 50. So I wouldn't even use any of this other stuff here. I would just use the RSI, or I mean, you could use both. They didn't have this before, the RSI based MA. I would literally just use the middle band. That's all I would use before when I used to use the RSI. So the way that I would determine divergence is when price is crossing the 50 here. And this is like the simplest way of doing it. I mean, there's different ways of doing it. You can use RSI, you can use the MACD, you can use a ton of different things. And that's why it's subjective, because if you're using different tools, you know, there's different ways to identify divergence. So I would use the simplest way because I wouldn't want it to get in the way of my trades. But I mean, there's a ton of different ways to do it. Going back to Talanji's question here, he's asking if I think there's going to be a good chance of market slowly making its way back to the all-time high. Let me go on the higher time frame real quick. Let's see, on 1 hour. Just want to see where the all-time high is. Let's go on the 4 hour. It's still pretty high, but let me just measure it to see where it's at. It's actually not that far. It's about like 14,000 pips away. So, I mean, yeah, it can make its way back up. One way that I would determine if it's probably going to be making its way up is to see if retail sentiment is shorting, right? So if you see the retail trader shorting it, then yeah, I definitely see it coming back up. You can see right here it's 60% short. So if it stays on the short side, 60% to 70% to 80% around there, you already know what the market makers are doing. They're going to be doing the opposite. So if that happens, you know, what we're probably going to see here is we're going to see a choppy move to the way up. So like you might see this push up a little bit, might come back down to lure in some more sellers, and then it'll just spike back up all randomly, right? That always happens. You guys have seen that happen time after time. Since we trade live every morning, you guys have seen this pattern come up all the time. It'll come up and then it'll just drop down again, just to lure in some more sellers. So this number over here increases. As this number increases, they're just going to keep spiking it up, right? They'll just spike it up, stop everybody out, and then just do the same thing again. So I don't think it's going to be a smooth move to the upside, but if you follow retail sentiment every day, which we will be doing, that'll give you a better picture as to like whether price is going to keep pushing up or whether it's going to keep pushing down. Because for the most part, if there's going to be more retail traders on the short side, I can definitely see market makers manipulating price up and down to make money off these people, right? And that's why we use this as our main component when determining bias, because obviously, you know, trading is all psychological. Like no matter what people say, it's always going to be about psychology, right? You kind of want to do the opposite of everybody. If everybody thinks price is going to come down, then you kind of want to do the opposite. And that's why we trade short term. So there's different ways to gauge it. I think for the most part, eventually I do think it's going to come up. It's, you know, it's inevitable. It's going to keep pushing up. Let's see, we're entering February, March. How much farther do we have? February. I do think we'll hit a new all-time high before summer, that's for sure. So maybe mid-spring, or it could be even sooner. I mean, who knows? You know, like during Christmas over here, a lot of people didn't realize it was going to swing all the way back up. But I did mention, you know, every year it's the same thing. From like December up until New Year's, from December 1st, actually, right here, December 1st up until New Year's, it broke, or it got close to breaking the all-time high, or it did actually right here on the 29th, which was no surprise because it happens every year. It's just, you know, how the market moves historically. If you go back and look at how price was moving, so let's see, it's February 8th. We'll go to February 8th of last year, right? Just see how price moved last year, because generally price usually moves the same way. So again, right here, so February 8th, right here, this is basically this day of last year, February 8th, and you can see where price started to push up. It kind of did that same thing that I just mentioned, right? It kind of pushed, it went sideways, pushed up a little bit to stop people out who were on the sells, and then it dropped back down to lure in some more sellers, and then all of a sudden just skyrocketed to hit an all-time high. So it's the same thing that I just drew earlier happening last year. It's probably going to happen again this year. So as you guys can see, my prediction that, you know, price is probably going to push up mid-spring, that's exactly what happened over here. And it just kept pushing up higher and higher. So this is something that you guys can look at. I mean, there's no guarantee it's going to happen, but if you look at previous data, US 30 usually follows what happens, during the previous years. And this happens almost every year. I only know this because I've been trading US 30 every day for like the past, 3 or 4 years now. So, I mean, if you guys want to go back and really see the analysis, you can always go back to the old YouTube videos. All of my live sessions are on the YouTube. So let me just pull up real quick. So if you really want to see how the market was moving last year and see my analysis real time, you just got to go to the YouTube channel, go to videos, and then you can literally go back to February of last year because I trade every single morning. And you can kind of just see what I was looking at during that period. It's not necessary, but I mean, you can just go back if you really want to see how we analyzed the market that day. Let's see. Nearly a year ago. So yeah, if you want to go back to February 8th, or I think it's right here. Yeah, February 4th, February 8th. So if you want to see my analysis of February 8th of last year, you can literally go back and you can see how I analyze the chart that day, right? I've been trading live every single day, guys. So like, you can see exactly how, I don't think we were really trading US 30 as much that time. We were still trading FOREX or other indexes. So we were trading the DAX around that time, but I was still analyzing, I mean, pretty much everything. So US 30 right here, you can kind of see it was bullish during this day. We have a lot of data on the YouTube channel because I trade live every day. So you can see pretty much my analysis this same time last year and see what we were looking at. And that's just like for you guys to go back and review, right? So just like I mentioned earlier, you guys have to go back and like actually study this stuff and practice and understand, how the market moves. That's the only reason why I understand how US 30 moves so well, because I've been trading it so often every day, like without no days off. I don't think we had any days off trading US 30 for like the past year, 2 years now. So I do really understand how it moves. So yeah, I can definitely see it coming up. Talanji, I just don't know when it'll come up, right? If anything, it might come up and hit all-time high, maybe mid-March. So if the same pattern plays out, we might get some consolidation, push the upside to stop everybody out, drop back down, some more consolidation, and then all-time high, which will be around this area right here. Yeah, it's the all-time high right there. So we'll see. I mean, it might happen, but it might happen later. It might not even happen by March, maybe by April, or maybe even sooner. Who knows? Yeah, and we'll keep watching for it. All right, let me scroll down a little bit and see what else I missed. Yeah, no, definitely, yeah. Yeah, and it's good that you're spotting it too, Talanji, because if you're starting to see it that way, and I also see it that way, and previous historical data shows that it's going to hit that way too, it's probably going to happen. It's just going to be a matter of time. Let's see. Let me scroll up real quick. Next question is from Brian. So Brian's asking, also in following the bias, meaning we will only be taking trades for buys above the pivots and sells before the pivots. Is that correct? So going back to bias, Brian, the first bias is going to be, as I mentioned, so if we have a strong retail sentiment bias and a fundamental bias, then we're just going to be following that bias. It won't really matter what the technicals are looking like, because the fundamentals and retail sentiment, if those line up together, those are strong enough to create a bias where we can just trade that direction. So like if they're below the pivots, but we have a strong buy bias, because this is what happens sometimes. Sometimes you'll get manipulation in the market. So let me go over here to like 630. Let me go over here to 630 real quick. So today we had a bullish bias, right? From 630 to 8. So we had a bullish bias and the fundamentals were bullish, right? You'll get this sometimes where price will be kind of bullish, but then it'll be manipulated to the downside. Since we didn't have a strong bias for technicals and fundamentals, we weren't really looking for buys around this period because price was below the pivots, right? However, if the fundamentals and retail sentiment was strong, then we could have taken this one right here. Even though it was below the pivots, we probably could have taken this right here for a buy, because it would still be this would be considered a V3 entry, right? So if we had a strong enough bias for the retail sentiment and fundamentals, we could have taken this for a buy, even though it's below the pivots. And as you can see, it still hit TP, right? So depending on what the bias is, if we have a strong bias for retail sentiment and fundamentals, then we won't really need to worry if it's below the pivots. However, for days like this, where we just weren't really sure because the bias wasn't very strong, in that situation, yes, we would only take trades if they're above the pivots. You know, the more confluences, the better. Pivots would be one confluence, trend meter would be another confluence. So like, for example, here, it's above the pivots, but the trend meter isn't green yet. So it's going to be a bit risky still. But once price starts to stabilize above the pivots and the trend meter turns green, so it's above the pivots and it's green. At this point, yeah, bias is going to be strong for a buy. But technicals are always going to be a bit iffy. So whenever it's just technical bias, you want to be a bit careful. You want to at least tie it to either the fundamentals, which today they were bullish, or, you know, in best case scenario, also retail sentiment. So it's just going to be depending on how many confluences you have, the more the better. But if there's no confluence for retail sentiment and fundamentals, then yes, you'd want to look for price to be above the pivots. And then even better, you would want the trend meter to match as well, because that's going to give you a better confluence with regard to direction for bias. Yeah, no problem, Brian. Let's see, next question here is from Victor. Victor is asking, so how are you entering trades off TradingView? I'm not entering trades off TradingView. I'm entering off MT4. So the profits that we send here, these are MT4 profits. We don't trade directly off TradingView. There's brokers that you can trade off TradingView, but we don't. I mean, I personally don't trade. There's some other people in the group that do trade off TradingView, but I don't. These profits are MT4 profits. This isn't TradingView. So TradingView is used for charting. The trades are executed through MT4. So you can see I have MetaTrader 4 right here. I have 3 different screens. I have my main screen right here in front of me. It's telemarketers. Phone's going off today. But yeah, so basically this main screen right here, I have one main screen. It's like my big iMac Pro. It's like a 29-inch, 30-inch screen. This is my TradingView. It's just TradingView. Right here on my right side, I have an upper screen, which is my MT4. On my bottom screen right here is the chat. So sometimes you guys will see me looking straight. If I'm looking straight, I'm looking at my charts. If I'm looking below, I'm looking at the chat. If I'm looking up, I'm looking at my MT4. So I have different screens here. You can trade on TradingView, but because the thing is, FTMO doesn't allow you to trade off TradingView. If they do in the future, then 100% I'm going to switch to, you know, whatever broker they have on TradingView. But for me personally, since I trade mainly off FTMO, I have to use MT4, unfortunately. I don't like MT4, but you know, it is what it is. So whenever you guys see me taking trades, I'm usually marking stuff up here, but I'm paying attention to my screen over here where I just have my finger on the buy button. We use the DOM. So whenever I see an entry, I already have my TP stop loss set. I hit buy or I hit sell, and then it enters, but I'm following it on the screen over here. So I know it's a little bit of a loop that you guys got to go through to, you know, use different applications. But once you do it enough times, it becomes pretty simple. But yeah, hopefully in the future they'll port it over. But right now, this is what I got to work with. But if you do want to trade on TradingView, Victor, you can use something like TradeStation or AMP. I think those are the 2 main ones that that people use for TradingView. Yeah, eventually, once we can do that, because the thing for my copier as well, because for my copier, I have 4 different accounts. I have MFF. So this is MFF. This is MFF. These are FTMO. These are copiers. So this is my main account. This is the only one that I'm controlling. I'm controlling this one right here. That's why it has a green strip, because it hit my TP. This is my main account. And whenever I take trades on this account, it copies over to my other FTMO. So right here, you can see the profits are different. This one for my main account, I made 2,300. For my copier, I made 2,070. For My other one's over here, I made 3,220. And then my other copier here, I made 3,220 as well. So yeah, once they make things available for TradingView, and if I can connect them to my copier, then yeah, I'll definitely be switching over to TradingView directly at some point, hopefully. But yeah, no problem, Victor. Let me scroll up real quick. Next question is from Delmas. So Delmas is asking, what are the best things to look for when trading Asia? I know you said it's risky, but I have had success trading during Asia, and I've had some fails too, but I know it can be done consistently. I'm just missing what should I be looking for outside of checking retail sentiment. So trading Asia, Delmas, you want to look at retail sentiment. You also want to look at the futures data. So I'm not sure if you've been looking at the futures data. It's not open right now, but when the market does reopen at 3, this will be updated. So this is open 24 hours because it's the futures. So I would use this. It's not very strong during this period, but I would use retail sentiment number 1, of course. Fundamentals, possibly if it's like one-sided, it's probably not going to move much because volatility is very low. Lastly, you want to look at the technicals. So you also want to look to see where price is. Depending on how many confluences you want, make sure it's either above or below the pivots for the 1 minute, 3 minute, 5 minute, and 10 minute. You don't have to look at all of them, but the more the better. So like you said, you found success with it, but in a lot of instances, you got to make sure, you got to really make sure you're trading in the proper direction. So I would check all time frames here to see if price is above the pivots. I would also use a trend meter as well to see if they line up. Right now, you can see the trend meter is blue, so it's indecisive. But if you look on the 3 minute, it's bullish here, 5 minutes bullish here, 10 minutes bullish here. So odds are this 1 minute, if it pushes above, it's probably going to go back to green. So, your bias here would probably be a buy. One thing as well is that you might want to be careful with the times that you trade. So you guys have seen Isaac's profits in the group. With Isaac, he trades during a certain period. He only trades the first 2 hours of Asia session. So he basically trades from 4 p.m. to about 6 or 7 p.m. Pacific time. So as you can see right here, it's currently, to turn on 16. So this is the period where I usually trade to, from 16 to maybe around 18, around there. This is mostly the only time I trade during Asia. And one thing that you can do too, Del, is look at your trades for when you win and loss. I'm pretty sure you took wins around this time period, and I'm pretty sure you took losses around this period. And the only reason I know that is because I take losses around this period too. So you probably take wins around here. And if you take trades from here until London Open, anytime after 1800 hours, which is about 8 o'clock Pacific, I'm pretty sure you got most of your losses right here, closer to London. So that's one thing for you to, to take into consideration, because that's one thing that I noticed. That's why I don't even trade Asia anymore. I trade sometimes, but it's barely, only if I see something that's really good. And usually my trades are only going to be right here between the first couple hours. And then after that, you start to see markets start to move kind of weird. It kind of reverses for a little bit, then it reverses again. As it enters, it's closer to London session. So that's probably the most that I can really give you with regard to trading Asia. Asia is going to be, it's going to be a toss up, right? You can never really be for sure. The problem with Asia too is that volatility is so low sometimes where you can't even get in and out of a trade. So say for example, let me go over here to yesterday. So let's see if I can find something over here. So Asia around here, 16 to, I'm gonna try to mark up those times. Let me just turn off this hourly breaks, clean up the chart a little bit. All right, so from 1600 hours to 1800 hours. All right, so this is exactly what I just mentioned, right? So for example, right here, if I turn, let me just turn everything off so I can kind of show you how price kind of moves around that period. So as you can see from here, from 16 to 18, there's a direction, right? You get a direction, And then from 18 up until like maybe another 2 hours, you get a reversal. And then you get this chop movement right here. And then market starts to move kind of crazy right here and starts to reverse again as it gets closer to London. So as you can see, market starts to get kind of weird around this period. So I only trade from like 16 to 18 right here, like basically the first 2 hours of Asia session. It's kind of similar to how we trade during New York. You can see it's a bit smoother where price kind of moves directional. You can also see here that there are a couple entries here that come up. Let me see if I can find any. Oh, I got to rewind it. All right, let's see. So you can see right here, there's an entry. So right here, we have a V3, which would have hit full TP. The problem with taking these entries here is that the TP is so small, right? You're going for like 50 pips. That's not going to be enough because your spread's probably going to be more than 50 pips. So it's like virtually impossible for you to take any trades at this point. So, sorry, one second. All right, so this is why I don't trade during Asia as well. Because the thing is, if your TP or your stop loss is 50 pips and your TP down here is going to be same amount, you're gonna hit your TP. The problem is that you don't have enough space to actually catch the move because volatility is too low. If that becomes the case, I just skip it, right? I usually want the stop loss to be closer to maybe 200 pips or even 300 pips if possible. But in this situation right here, it makes it very difficult for you to really get those types of entries. Nothing here, another entry right here for a sell, and same situation again, right? So your stop loss is like 40 pips. That's probably going to be your spread. So it just becomes too risky because you're not always going to get that big move. So that's one thing that you also have to gauge. If the volatility is way too low, then just skip it, because the last thing you want to do is get caught in a trade. Because what happens is if you enter a trade, you have to cover that spread first. You won't even make any profit. So realistically, if you were to enter this trade here, you'd have to make double your profit, which is possible, but you're not going to get paid that much right off the trade. You're going to get paid half of it, but you got to go for double the move to incorporate your spread. So a couple of things to keep in mind: bias, time of entry or time of your trade, and also looking over at the stop loss, because you don't want to have it too close. Because if that becomes the case, you might just get stopped out before you even hit your TP. All right. So other than that, let me see if there's anything else. Yeah, Randy said spread is a killer too. That's exactly why I don't trade during Asia anymore. Because man, this is crazy. Like this is what happened to me last time. Like I just said right now, right? So if I take the sell right here, like this would just blow, like it would drive you insane. Like this is where your TP is, right? And say price is like way down here. It's like way down here, and it doesn't trigger your TP because you got to cover the spread. Realistically, you're probably gonna have to cover like this much of a move before you can even get pulled out, but you're only getting profit from over here. So it's like so dumb, because it's like you're taking so much risk, because you should have been pulled out right there. But since the spread is so wide, you have to go like way down here just to get out and only lock in this much profit, which it just doesn't make any sense, right? It's like, why would you even trade it? Because if you lose a trade due to the spread, you're going to get screwed. So like, for example, right here, you're just waiting for it and you're like, okay, thankfully it finally hit your TP, but you had to make this big of a move where it's not even equal just to hit your TP. And if you took this during, New York session where price was actually moving fast, you would have had the entire profit here. So it's not even worth it. That's why I don't even trade during Asia anymore. I barely trade during Asia unless like market is actually moving. So yeah, and that's what Solange just said too. He said, yeah, not even worth it. Better off waiting, which I agree. But I mean, if you really want to trade, just be really careful or take a smaller lot size, because you're going to get frustrated. Trust me, you're going to get super frustrated because you're going to be sweating and you're going to be stressed out, like just trying to get out of the trade when you're in it. Because what will happen is you'll be so deep in profit and you're like, damn, I want to close out, but you look at your profit, you're still in the negative. So you're gonna be so upset because you're gonna get out and then you're gonna have like a few bucks and you're like, oh man, I was so stressed out for like a good hour, 2 hours for like a few bucks, right? So just something to keep in mind. That's why I rather go a bit heavier during New York, just lock in my profits. Like for today, right? I locked in about like 9K for today, right? So like if I add this up, let's see, 2320 plus 2320 plus 2070 plus 2370. So that's how much I locked in just from one trade this morning, right? Waiting for that perfect trade, taking a pretty decent lot size, and then spreading it across my accounts. That's just one trade. Instead of me having to trade all day, I'll just take like one trade, like one really good trade, and then I'll call it a day. That's all I did. And that's what I try to show you guys, because a lot of people just don't see it, right? You see it now when it's added up, but you don't see it. Like your accounts add up and your spread is spread across the account. So like if you mess up on one trade, it's not going to blow your account because you have them spread out across like four or five different accounts. So something to keep in mind. All right, let me scroll up real quick, see what else I'm missing. Oh, sorry, Sammy, I did see your message there. Yeah, so Sam's question was, what's the minimum stop loss for the V3? I usually want to have it during New York session. I want to have it around 300 to 400 pips. During Asia, I want to have it at least around 200 pips. So 20 points around there, 20 to 25 points. Because you want to cover the spread. The spread during Asia is probably going to be between 50 and 100 pips. So you want to have a lot of cushion there in case it like pushes you out due to the spread. Yeah, and CT said since it's Asia session, try testing the Hang Seng, the HSI for appropriate index that is open. Yeah, I mean, possibly. Is that what you sent me earlier? CT, let me check my messages. Oh no, this is something else. This is the the stuff that we're looking at during the live. Yeah, I'll take a look at that later. But yeah, I mean, maybe when the market starts to reopen, it's still closed right now at 43. Let me scroll up again and let me see if there's anything else that I'm missing here. Talanji said, do you have a system for knowing when and how much to move your stop loss and profit? So I don't have a specific system, Talanji. It's just, it depends on the trade, right? If the volatility is high, like if you're getting big spikes of price, then I'll move it per candle. So like, let me see if I can find an example here. So using this as an example right here. Not that I was in this trade, but I'm just going to show you an example here of how I move my stop loss and profit. So, I mean, depending on how many confluences you have, say, for example, you have a trade running on the 10-minute, right? That's going for a bigger TP. And we'll just use that for an example here. Not that this trade had that happening, but I'm just going to use this for an example here. I don't know how this trade is running, but we'll just see how it works out. Okay, so let's let it run. Pushes up a little bit. So as you guys can see right here, when it establishes another low, this is where I'll start to adjust my stop loss and profit. So for example, right here, you can see where it establishes a low, higher high, higher low. At this point, I would move my stop loss to this candle right here. It's very subjective the way I do it. I just know how to follow the moves, because if I see something like this play out, I kind of have an idea that price is going to keep pushing up higher. So what I would do at this point is I would move my stop loss to right there. This is where my stop loss would be in profit. And then as price continues to push up higher, I move my stop loss again in profit. And then as it pushes up higher, I usually like to look for wicks. So for example, right here, there's no wick, so I probably wouldn't move it in profit yet. Maybe I would, maybe I wouldn't, depending on how confident I was about this move here. Again, right there, no wick, right? Right here, we have a wick. So at that point, I'm going to put it again right there. And this is more of an advanced way of trading because it's very subjective. There's no like hard line way of identifying it. It's kind of just looking at how market's moving. If it keeps pushing up, I just keep moving my stop loss. So I'm still in the trade at this point. If I'm trailing my stop loss, I see another wick right there. I do the same thing, move my stop loss higher. Another wick right there, move my stop loss higher. And there I am, pulled out. So at this point, instead of locking in just 300 pips, I would have locked in 1,300 pips. So this is one way of doing it. I mean, there's different ways of doing it. I have a lot of different techniques that I use, but this is one of the simpler ways. It doesn't always work out this way. Sometimes you guys will see me on the live where I'll do this and then I get stopped out and I'm like, damn, I should have waited a bit longer. Because you'll see this sometimes where you'll just, it's different me explaining it to you here while seeing it real time, right? Because when you're in real time, you get nervous, you kind of second guess your move. Here it's easy for me to explain, but that's basically what I'm looking for. If I see a position going up, like for example, I was saying earlier, if this was a 1 minute move, but say we have a daily running on the 10 minute and the daily's TP is like way up here, then I would just keep setting my TP higher and I would just trail it. But there's different ways of doing it. It's not the only way. Yeah, so like Talanji said, right. So last candle closed, rarely get the full move. So I'm trying to get better. Yeah, it does. It gets on your nerves. Your nerves get tested. It's all trade psychology. But I think the main thing to be aware of is moving your stop loss and profit. I think if you move your stop loss and profit, that's like the best thing to do. But in some instances, you can catch a bigger move like this, especially if you have a bigger confluence on a different time frame. Let's see. Fahad said for the V3, are we not putting stop loss at the wick of the first candle anymore? That's usually where it's at, Fahad. So that's how the strategy is set. So going back to the strategy here, it is set at the wick of the low. So like if you're just taking this on its own, I was going over something else, Fahad. I was going over how to trail your stop loss or how I trail my stop loss. But yeah, you still put your stop loss at the low or the high, depending if you're taking a buy, you put it at the low. If you're taking a sell, put it at the high. But I would leave some cushion here. So even though it's like about 300 pips, I'd probably put it maybe below like 350 or maybe even 400 just to cover the spread in some instances if the spread's kind of wide, because the spread's been kind of weird for the past couple weeks. So you do want to have some cushion just in case if the market's too volatile. Let's see. Mauricio's asking, would you have a higher stop loss on the 5? So the stop loss is always going to be placed at the swing or at the low, Mauricio. So like the low here on the 1 minute, it's going to be 300 pips. If you look on the 3 minute, here's an entry here. I'll just take some stuff off. I just want to show you guys an example. These aren't actual entries, but I'm just showing you guys obviously examples here. So again, right here, Mauricio. So this is around the same time. This entry came up around 12:04. The same entry came up here on the 3 minute at 12:03. So at around the same exact time, this same trade came up on the 3 minute as it did on the 1 minute. So your stop loss is going to be different. It depends on which time frame you're trading on. So over here on the 3 minute, if you're taking the same exact trade that you took here on the 1 minute, because they came up at exactly the same time, they're going to vary, right? So this trade came up right here at 12:04. This trade came up here also at 12:04. The stop loss here is going to be at 450 pips. The stop loss here is going to be 300 pips. So it just depends on the time frame. Nothing here off the 5. But I mean, if you wanted, so like, for example, here, this is the confluence that I was just talking about. So like, again, right here, we have a low with the trade, but this came out earlier. This came out at 11:55. So at 11:55, there was another trade running right here. So if you're taking it on the 5, your TP stop loss is going to be 620. If you're taking on the 3, stop loss is going to be 450. Taking it on the 1, your stop loss is 300. Just depends on the time frame. You know, if you even want to go even higher on the 10-minute, there's actually another entry here, same exact entry, just on a different time frame. So let me just clean this up. Actually, there's no entry there. That was a green candle. So nothing off the 10, but there was one on the 5, which is different. 3 was different, and the 1 minute was different as well. Yeah, exactly, Fahad. It just depends on the time frame you're trading on, but you definitely got to put it. That's where you want to place it, at the high or the low. Let's see what else we got over here. Let's scroll over real quick. Yeah, no problem, Mauricio. I can help you with that. Okay, let me scroll over here real quick. Kevin's asking, when will the updated videos be available for each strategy used during the live? So once we finalize the variation strategy, which is going to happen pretty soon, I think it's too early to say that because this variation strategy, I barely created this like 2 or 3 weeks ago. So we haven't tested it enough. But once all the variation strategies are like completely done, then I'll create new videos. Because the thing is, I don't want to create a video and then have to make changes later. I want to just do it once and then have it completely done. So we know that the strategy is 100% at that point. So maybe I'll start rolling them out a little earlier. Like maybe I could start with the V1 and then make my way towards the V3. But I think we should probably make sure the strategy is 100% before I make the videos. Because I mean, the strategies are pretty simple, but we just want to make sure that it's completely, you know, basically bulletproof before I create the videos for you guys. Because I don't want to teach you guys one way and then we change things, you know, a month later because we find something different. So I was hoping to start them this month, but they might start next month. It just it'll just take some time because I want to make sure they're like absolutely ready to go before I make official videos for them. Henry's asking, can you show the settings again for the trend meter? Yeah. So Henry, if you're scalping, your settings for the trend meter just have to be set at chart. So you go over here to your settings, your default settings are going to be intraday settings. So these are intraday settings, 30-minute, 1 hour, 2 hour, and 4 hour. You just have to go to chart. This will give you the trend for your specific chart. So if you're trading on the 1 minute, you want to know what the trend is for the 1 minute time frame, right? So you just set them all to chart like that, and then it'll give you the trend for this specific time frame. That's how you'd set it. And same thing for the 30-minute. Your trend meter should all say chart. Same with the 5-minute and same with the 10-minute. Nothing's different. It just has to say chart. Other than that, let's see. Talanji said, I wonder if Asian news affects US 30 during the Asia session. I mean, it can, you know, because some companies are related. I mean, there's different things in the market that can affect it, like oil prices, obviously. You just got to look at what stocks are in the index, right? Like some of these companies are active in like other countries, like for example, Visa, right? Like last week, I think, or a couple of weeks ago, there was New Zealand news, which was credit card sales. Which credit cards here are used in New Zealand? I'm not sure if Amex is used out there. Maybe it is, maybe it isn't. But I know Visa is. So I remember last week, some of you guys saw a spike in price when the news came out for New Zealand, and there was like no real explanation as to why it spiked. One of the reasons could have been the credit card sales, because the price spiked around that same exact time when the news was released. So it might not affect it directly, but indirectly it can affect it, right? There's always going to be different things that are going to affect the market. So just something to keep in mind. And this isn't all conclusive, right? It's all going to be different. It just depends on how you analyze it or how you want to use logic to tie, you know, what spike in price, what caused the spike in price, whether it was news or whether it was something else happening around the world. I mean, we really don't know. All right, let me see what else we got here. All right, scrolling down. Let's see, Victor's asking, how do you link the accounts? For me personally, I use Social Trader Tools. Victor, there's like different platforms you can use. Majority of us use Social Trader Tools. So that's what I use. That's what Matt uses. That's what pretty much everyone uses here. Let me see if I can pull up the website. So it's socialtradertools.com. This is what I use personally. You just log in. Well, you have to set up an account, and then you'll just put your details for your MT4. You'll have one main account, which is the master account. And then from there, you'll have copier accounts that will copy your trades. So I have one main account, which is basically whenever I post my profits and they have the green strip or the red strip or whatever, that's going to be my main account. My copiers are going to be these accounts over here because these just copy all my moves. That's why the profits are different. So whatever this account does, if it buys, these accounts will buy. If this account closes, the other accounts will close. That's how we would set it up. And that's what I use. I use Social Trader Tools. I know other people use different ones, but me personally, this is what I use. I think it's free for one account. I have like 5 accounts on there because I have my copiers, plus I have my personal trading account as well. So I have about 5 accounts. I pay about $60 a month, I think, for it. It's like, I don't know how much it costs, but that's how much I pay for 5 accounts. So, and it pays itself off, right? I mean, if you make one profit across your accounts, it pretty much pays off the subscription. So it's not a big deal. But that's what I personally use. Yeah, no problem, Victor. Let's see if there's any other questions here. Let me scroll up real quick. I think that's it for now. Do you guys have any other questions? You know, this session is going to go on for as long as we have questions. So I'm here to answer whatever questions you guys have. If there's no other questions, then I don't really have anything else to cover. So if you guys have questions, just drop your questions in the chat. I'll answer whatever you guys need help with. And then we'll wrap the session up. Henry said, can you show the settings again for the trend meter? Yeah, sure. The trend meter is down here. You click on settings. You just go to inputs. For all of these here, that you just got to choose chart. So time frame 1, chart. Time frame 2, chart. Time frame 3, chart. Time frame 4, chart. And then it'll set the parameters for the specific chart that you have it on. Pretty simple. Yeah, Mauricio said these sessions are great. It allows you to use it to focus on the money time in the AM. Yeah, no, definitely. That's exactly why we have these sessions here, guys. Because I know it's harder for me to answer questions during the live because we're focused on just trading. But I do want to help you guys, right? You know, my main goal here is to pretty much groom you guys to be, you know, successful traders, just like everyone else in the group. I know some of you guys here are struggling still, which is fine. If you guys are new, a lot of you guys are brand new to trading, so you guys aren't going to get it right off the bat. But, you know, with time, you're going to get just as good as everyone else. So, yeah, I don't know if you guys have any other questions. Feel free to drop them in the chat. Otherwise, it's all right if you guys don't have any questions for today, because I have this session every week. So if you guys have any other questions, what I do recommend is just write down your question, or if you guys have a trade that you want me to cover, write down a timestamp for that trade, and then I can go and review it. Because, you know, I'm here to help you guys out. So if there's anything that you guys are confused with, you know, with regard to any strategies, any bias, lot sizing, risk management, anything like that, you know, I'm here to help you guys out. I know a lot of you guys try to pass your FTMOs like in one day, but, you know, it's a process, guys. You guys got to make sure that you guys use the time that you're given, because you don't have to pass your FTMOs in one day, guys. Just keep that in mind. You have like a whole month to pass, and you only need 10%, right? So for example, like today, so over here, you see how I made about 2,000 off this account. If this was a challenge account and you guys can just take one trade a day and make 2,000, you can pass your FTMO within 5 or 10 days, right? It's not that difficult. What happens is a lot of people want to over leverage or over trade because they want to pass their FTMO within a couple of days. And it wouldn't matter because you still need 10 days to trade anyway. So, you know, use your days wisely. Don't rush it. All right, let's see what else we got over here. So Isaac said, at one point and under what conditions would you decide to combine two FTMO accounts into one trading account? I'm concerned about risk management if I convert to one. So that was my problem too, Isaac. I actually had mine combined at one point. Um, what happened was I wasn't used to trading a 400K account, and it threw me off because you're taking way big lot sizes, right? Normally I take 10 lots. If I'm on a 400K, I have to take a 20 lot. And that messes with my head because thing is, I was going to like, when you go in a drawdown, you're like down 2,000, right? But if you're on a 20 a lot, you're down like almost 5K on one account. So it kind of messed with my head. So what happened was I just asked them to split it back into two accounts because it worked better for me that way. So I would just say once you're ready, you might want to play around with maybe a demo and set it to like 400K and then see how you feel. Like if you're still nervous or you're not comfortable with trading a big account, then it would make sense for you to just keep it separate. But if you feel comfortable and you're okay with it, then that's when it's time. For me personally, I'm still like worried because the problem with me combining my accounts is I make one mistake and I'm not used to like the drawdown and I could lose my account right then and there. For using these split accounts, these are okay because, like, for example, if we're trading on a risky day, I can just trade one account and I can just leave these accounts alone, right? So I can just, if I lose one account, that's just one account. I don't lose all four of my accounts at once, especially because I'm using proper risk management. So it's going to be a personal decision, Isaac, depending on how comfortable you feel. I'm still not comfortable, like, being realistic with you guys. I've been trading for a while now, but I'm still not comfortable with going into like 10K drawdown. Because the thing is, when you combine your accounts, you have, instead of a 10K drawdown for the day, you have a 20K drawdown. So when I go to 10K drawdown, I don't realize that that's only half of what I can lose. It kind of chips you out and you want to close out the position because you think you're going to lose the account. But realistically, you have like another 10K to go into drawdown. So it's just going to be a bit of practice and confirmation with your trade psychology. Let's see. All right, let me scroll up real quick and see what else I'm missing here. Yeah, Dejan said it was a bunch of risky trades near the end of New York I seen play out. And I noticed it too. There's a whole bunch actually. Yeah, so towards the end of the session over here, there was like this one right here. There was one right there, full TP. There was another one right here, right next to it actually. Another full TP. I think market was too dead right here, but there was a whole bunch. Like there was I think another one out, or again right here for a buy, full TP. There was a lot actually that came up towards the end of the session. I don't trade during this time because it's just too, it's obviously too risky to trade during this late of the session. But I mean, all these trades here all hit full TP. Full TP, full TP, full TP. I think this probably would hit full TP too, but it might have been too tight of a trade. Yeah, it's too tight. It was like 100 pips. So that wouldn't have been a trade that we would have taken. But yeah, I mean, there was a lot of trades here that hit full TP towards the end. I didn't take them obviously, but they were there. All right, so let's see. Let me scroll down real quick. Okay, so that's it with that question right there. Let's see, Victor is asking, so if you have two accounts and you link them, how do you gauge your lot size to trade? For example, account with 10K and account with 100K would be different lot size. You can change your lot size. You can use a lot multiplier, or you can use fixed lots. It's just up to you. I mean, the copier it does whatever you set it to do. For me, so all my funded accounts here, these are all 200K, but my personal account is like 2K because I only leave so much money in there. I don't leave too much profit, too much money in there in case, worst comes to worst, some BS happens and then my account goes missing. But you can see right here, this is my, so I'll show you my profits here. So my profits kind of differ. This is with all the green strips. This is my personal account, or not personal. This is my main account. These use 7 lots. My copier use 7 lots. My other account use 7 lots too. My personal account right here is a smaller account and it's Hugo's way. So I use different lot sizes. For here, I use a fixed 0.03. So you can use fixed lots. You can use lot multipliers. You can use, I mean, it really depends on what you want to set it to. But I mean, you should know how to gauge the lot size by, figuring out what the percentage is. So if you're using a 10K account and you're risking about 3%, I mean, depending on where your stop loss is. So let me see. You only want to risk about 300, right? So if you're risking about 300, depending on your broker, that's probably going to be, if your stop loss is, I don't know, if your stop loss is like 500 pips, you're probably going to use like a 0 point where it's going to be about 10 cents per pip. So 500 times, trying to 20 cents. No, 500 times maybe 30 cents. All right, so you probably want to keep yours below, a certain thing. So if you're going to take a trade and your stop loss is going to be 500 pips, you just figure out what your lot size would be. It'd be a 0.6, right? Or a 0.06, depending on your broker, if it uses mini or standard lot sizes. And you would just set it to a fixed lot. Like for example, here I have a smaller account, but I take bigger risks because I don't really care what happens with the money in there. Like I have like 2,000 or 3,000, but if I take bigger losses, it doesn't matter because I'll just re-up on that account because the leverage is high on Hugo's way. So I mean, it just depends on like what you set it to. Like for example, here I could use bigger lot sizes, but that's only because I only keep a certain amount in that account, but I can always put more in. Like say, for example, I have a reserve of like another 10K, but I have 3K in there. I would just use how much I would need the lot size to make profit. Because the thing is, I take profit out whenever it reaches a certain point because I don't want to leave too much money in that account just in case, I don't know, worst comes to worst, Hugo's way just disappears. So yeah, I mean, that's how you could set it up. Yeah, so Victor said, yeah, I can gauge how much per lot to do per lot. I just didn't know if Social Trader automatically adjusts. So you can set it to lot size multiplier, risk multiplier, equity multiplier, or fixed lot. There's a bunch of different options. I use fixed lot because I already know what lot size I want to use. But you can set it to, if you want a risk multiplier every time you do 3%, you can do that. If you want to do equity multiplier, you can do that as well. It just depends on what you want to set it to. Yeah, I know it's nice, Victor. Like once you play with it, it's nice because you can see I post all my profits here every day. I only got to do work on one account and every account just copies it. So I could spread my risk across like, 4 or 5 accounts. So instead of me taking a big loss on one account, it gets spread across like pretty much all my other accounts. Yeah, you'll see it's a game changer for sure. Let me see what else I got over here. So let me scroll up real quick. I'm going to go back and make sure I didn't miss any questions here. All right, question from Talanji. Talanji's asking, for a V3, say we get an invalid sell momentum signal on a green candle. In your experience, would you say it's still valid for taking the next V3 buy? Yeah, so it doesn't matter if it's valid or invalid. The only thing that would matter is if you get the signal on the entry candle. So let me see if I can find an example here. No. It doesn't happen very often, but it does happen every once in a while. Okay, so like for this, for example, right here, right? If you get a signal on the entry, so like you have a low here with a red candle, and then you have a buy, this is the only time where it would come into play. This is obviously you wouldn't take it. And as you can see here, it went straight to stop loss, right? So that's why it would come into play. It doesn't happen very often, but when it does, you definitely skip the trade. If it's invalid like this, that's fine. It doesn't matter because that happened like way back. You know, it can just, it can even out once it gets to the next candle. But that's the only time that you really want to avoid it, when it happens on the entry candle. Yeah, definitely. Yeah, no problem, Talanji. And this is something that I started to notice too, just from like looking at this is something that Maddie actually brought up to me. He was like, yo, we should always, and this was actually a requirement that Maddie had for other strategies. Like for the high lows, I never really took that into consideration, but whenever you get a momentum signal like that, it's usually going to, like, this is what I used to do before. When I first created this indicator, because this was like the first indicator I had, whenever I got a signal, I was like, all right, one or two things are going to happen. Price is either going to go in the direction or it's going to go completely opposite, right? And as you can see right here, it still does that. So like, for example, right there, you get a sell signal, it goes in one direction, right? You know, same situation with this over here. Whenever you get something like this, price is going to go one way or the other. It's not always going to go up. It's not always going to go down. Obviously it went up, right? Here's an example of it not working. You get a sell signal, one of two things are going to happen. Price is either going to reverse on you or it's going to drop down lower. You can see right here that it didn't actually play out. It did the opposite. But then when you get the opposite signal, you're like, okay, same thing could happen, right? It can go opposite or keep going. This is how the strategies were built. I initially created this indicator first, and then I was like, okay, how can I improve this strategy? Then I created the trend meter, right? So obviously I wouldn't take a sell here because I created the trend meter. I'm like, okay, if the trend's green, I'm not going to take any sells. I'll look for some buys. From there, I created more indicators, right? I created the SR indicator. I'm like, okay, what else can help me to improve my win rate? From there, I created the pivots, right? I created the sessions. This is how like K2 has grown over the years. If you guys have been with K2 from the beginning, you guys have seen that the strat every year, we just keep getting better and better because I find more solutions to whatever issues we run into. So whenever we run into issues where we start losing trades, I create something new. I create a new indicator, create a new strategy, something to make whatever we're doing better. And that's why we just keep progressing with the strategies as time goes along. All right, so let's see. Let me go over here real quick and I'll see what else we got up here. I see your question, Dejan, but I'm gonna go up and I'm gonna answer whatever questions I'm missing first. So scrolling down over here. Adele is asking to add extra confluence to the V3 strategy. Can you show us an example with liquidity confluence for? Yeah, I guess I could find one. Let me see if I could find something here. So let's see. All right, so I could use this right here. This is actually an example that I can show you. So for example, right here, we have a buy entry, right? First, what I'm going to do here is I'm going to draw liquidity zones. So we got liquidity right there, or I wouldn't call them liquidity zone, just liquidity areas. All right, so using this as a confluence deal, for example, right here, we have a buy, right? For about 370 pips. So we're just going to gauge it. So for example, right here, you can have a good confidence in price pushing up past this and actually hitting TP because we have liquidity right here, right? So if price reaches this point, odds are it's going to push up even higher, right? Probably push up to this point right here. And then if it pushes up to this point and hits liquidity again, it's probably going to push up to this point over here, right? So this is using it as a confluence. Like, for example, here we let it run. Price didn't exactly hit liquidity yet, but then it hits it there. And what you can see here is if price comes back up, so it pulls back a little bit, but if it pushes back up like that right there, see how far that candle pushed up? It came up for a retest and it shot right through it. So this is one way to use it as a confluence. I mean, you don't always use this, but if you wanted to use it, you can see when price reaches this point, it just skyrockets, right? Went straight to TP. Again, right there, look at this candle next to it. So it hit liquidity around this area, and then look what happens with the next candle. It shoots right through it again, right? It hits liquidity again right there, and it just keeps pushing up. So see right here, I drew all these liquidity areas. It did exactly what we anticipated, right? Came up, hit liquidity, hit the next liquidity, pushed up here, and then now it comes right back down. Or it comes back up. I mean, there's no guarantee which direction it's going to go. It can come down or it can go up. It looks like it came down here and then it just shot right back up even further. So, I mean, there's different ways to use it, but as you guys can see right here, this is one way to analyze it and to use it as to your advantage to, you know, catch a bigger move. Dale said, what about liquidity area to the bottom? It could go down as well, right? Yeah. So for example, right here, okay, so you let me just delete this. I'll clean it up real quick. Okay, so just like what Adele said again, right here we have, there's liquidity on the top side, there's liquidity on the bottom side. I don't think price has moved since here because this is current time, so you're not really gonna see much movement. But using this as previous example over here, it's the same thing, right? So again, right here, if you drew liquidity for the mid-market reversal, so we have liquidity right there, liquidity right there, liquidity right there. I mean, it does the same thing. Pretty much the same use here. So you got liquidity right there, liquidity right there. And it works both ways. I mean, it doesn't always have to be for the upside. It can be for the downside as well. So right here, let's see if there's an entry anywhere around here. Okay. So I don't know what color this candle is. Probably not. I don't know. I can't tell. I can't tell if this is a green or red candle, but we'll see if there's anything here. So it does work both ways. I mean, if you had an entry for a sell here, for example, I don't know if there is a sell here, but if there was an entry for a sell here, you could have done the same thing. You know, price hits liquidity here. Odds are it's probably going to push down to the next liquidity zone or area. I don't want to call it a zone because it's not really a zone. It's just an area of liquidity. Drops lower, hits liquidity again, comes back for retest, probably drops even lower, who knows? And it drops all the way down. So as you guys can see, I drew these lines before it happened, and obviously you can see it came right back down to all these areas here. So it works both ways. You don't have to take it for buys, you don't have to take it for sells, but it does. Adele said, so it acts like a magnet, I guess. Not a magnet, but more of an amplifier. So if price is already pushing below here, it just amplifies the push, right? Because it doesn't pull price. Like, so these liquidity areas, guys, these don't pull price. So that's why it's not like a magnet. What happens is when it touches these areas, it amplifies the push. So like, for example, right here, price reaches the area, it pushes right through it because there's a lot of stop losses around that area. So again, right here, I wouldn't consider it a magnet. I consider it an amplifier. So right here, price pushes below here, and then it's just an amplified push to the bottom right here, right? Like within 1 second or 1 minute, it pushed right down here. Again, price reaches this point again right here, right? It's not a magnet, it's more of an amplifier. It goes right here. It's like adding fire to oil, right? Like say these are like spots of oil and price hits these areas and price just like pushes right through it. Again, right here, you can see it hits these areas, and these are all 1 minute candles, guys. So these aren't like big candles. These are just 1 minute. Every time price hits these areas, it amplifies the move and it shoots right through it. See how fast these candles move? They come up, hit it, bounce, hit it, bounce. And that's pretty much, you know, how it works. So yeah, Talanji said it's literally like a game. Yeah, I mean, it is. That's why I always draw these liquidity areas so that you can possibly catch, instead of going for 150 pips, you can go for like 1,000 pips, right? So yeah, it's one way to do it. I know there's other strategies that kind of show you how to identify this stuff, but I feel like the way I do it is really simple. It makes it easy for everyone to see. I mean, it literally takes out the guesswork. So you don't have to do anything. All you do is draw the lows. That's all you do. You don't have to do like any work at all. Like for example, again, right here, you do the same thing. You know, you draw the high there, or the high gets pushed up a little bit. You got another high right here. All right, so we do it again right here, right? You have these highs. This is all like real time because we're playing it real time. All right, price broke through there. Do you think price is going to get to this point? I think so. It takes a while, but it eventually does. Got to right here. Do you think it's going to get to this point? I think it does. And there you go. It's like a game, pretty much. But yeah, I mean, it's pretty simple. I mean, this is what I try to do with you guys, right? Because the thing is, I can identify this stuff without the indicators. The thing here is me trying to show you guys where it's at, right? It's harder for me to show you guys without having these indicators on here. So with having these indicators here, it pretty much takes out all the guesswork and you guys are able to identify it a lot easier. Yeah, no problem, Adele. Victor said, will the support and resistance indicator show the liquidity areas? Isn't that the same thing? So yes and no, Victor, because the thing is, these are just high lows. The support and resistance indicator identifies where two or three, like where it's tested 2 or 3 times. So if you turn this on right here, they do line up sometimes, but they're not always going to be there. Like for example, right here, you see how it tested it 3 times? That's how it created a support, but it's not going to be there before it happens. So like, for example, over here, you don't have the support and resistance created yet because it hasn't tested it yet that many times. So the high lows are actually, they identify them faster because in order for you to get a support and resistance, that same exact price point needs to be tested, you know, 2 or 3 times. It's only tested a couple times here, so it hasn't created that support and resistance yet. So while you're waiting for it to be created, you could already have, you can see right there, it finally got created, right? The support resistance indicator is a bit more laggy because it gives you a stronger support resistance point, but these high lows, it tells you right away where the high lows are. So they're a little different. But you can use both. I mean, if you want to use both, it'll give you even stronger liquidity area if you want, but I don't think you need to have that much of a confirmation, right? You want to keep it where there's still some wiggle room where you can still kind of be risky, but also be waiting for those moves. So, I mean, there's different ways of doing it. It depends on like, you know, how much risk you want to be averse in the market. But I would probably just use the high lows. It's just a lot easier. Yeah, exactly. Yeah, like Solange said, institutions can see it with no candles and no indicators. Yeah, no, exactly. They go directly off price. And you know, it takes time and practice where you can see that. Like I can trade off a naked chart. I don't need all these indicators here because I created the indicators. I already know what they mean and how to identify them. But for me to show you guys, you know, you guys can't learn what I learned in like 10 years over like a 1 month period, right? That's why I created these indicators here to show you guys. And that's why these are all something that I created in order to make things a lot easier for me and for you guys, because it helps, right? Like for me, I could analyze this stuff, but it'll take me like an hour to analyze it, right? Because I have to go and draw all my stuff. Like if I want to see the trend, I'm like, all right, I got to draw some channels here or something like that. And then I got to go draw, you know, all these other like individual things, trend lines and stuff. But instead of me doing all this, I just turn on the indicator and everything is pretty much there. It takes out all the guesswork. And that's why I created these. A lot of people hate on indicators, but the thing is I created these indicators for my own use, because I can do it without it, but I don't want to do all that work. It's just, especially if you're scalping, you want to be able to identify these trades quickly. You can't be wasting your time analyzing the chart. You just need these, you would use these indicators to identify it for you so that you can just point out exactly what you're looking for. But yeah. Randy said 1 month, why not? What kid of Goro are you? No, exactly, right. But yeah, no, these, these indicators help like brand new traders learn how to trade, because what I'm doing here is I'm basically teaching you guys how to read the chart without having to do all the work. I mean, obviously you guys want to learn eventually, but the more and more you guys practice, you guys are going to be able to see things on the chart without even having these indicators on there. Like for me, I don't need all these indicators. I can just look at the chart and be like, okay, prices is like, if I turn these off, I'm like, all right, this is kind of simple because price is trending up, right? It's not that difficult to see if price is trending up, right? Because you have an uptrend there, price pushes up higher. And then you can just, there's different ways to analyze the chart here, but I want to be spot on. So that's why I have the indicators here ready to pinpoint this stuff. Let's see. Yeah, Mauricio said these K2 indicators are an FX weapon. Yeah, I know exactly. Talanji said, bro, you single-handedly changed my life, no joke. And I'm only getting started. Yeah, no, definitely, Talanji. I know you've been here for a while. Well, not that long, but you've been here like consistently getting on point with this. Talanji said, and you don't get 100,000 views like these so-called gurus. It's crazy how I found you. Yeah, I mean, I try to stay under the radar. That's why I don't really have open signups for K2 anymore, because I don't want everyone to use my strategies. Like you guys are fine, because if there's like a couple hundred of us using my strategies, it's fine. But if we have like thousands of people using my strategies, it's going to affect the market. So that's why I try to keep it low key. And the thing is, I'm here to help you guys out. Like I make profits off these markets every day. There's no point in me not sharing with you guys. It's like the market's going to change. So the thing is, I adapt with the market, and then we just keep adjusting things to make things better. All right, let me scroll up real quick, see if I missed anything else. Let's see. Just want to make sure I didn't miss anything here. Talanji says, anybody from the UK that can advise on trading taxes and finessing? I don't think you guys pay for trading taxes in the UK, Talanji. I know you guys don't pay capital gains. I don't know. You might want to see like an accountant out there to see, but I don't think you guys pay taxes like we do here in the US. For me, I run all my profits through my businesses, so I don't get taxed the normal way. And that's why I trade mainly on FTMO, because we get paid through like self-employment. It's like self-employed. Like a contractor. Basically, it's not W-2, it's a 1099. So I run these through my profit. I have to run the profits through my companies, and you get deductions and stuff. Like I got my car, it's a deduction, it's a business car. I get like an apartment, it's my business office, stuff like that. So there's different ways of doing it. I don't think the UK has a capital gains tax. But in the US, there's, obviously there's more loops and holes, but there's ways around a lot of things here. Dejan said, that's why you risk playing with Hugos, Sean. Yeah, exactly. I just play around with it. Brian, let me scroll up again. I just want to make sure I didn't miss any questions, because I did see a couple here. Fahad said, Isaac's here. If you don't mind, would you join Sean on one of the mentoring sessions at some point? So I know a lot of you guys like want to get help from like other people in the group, not just Isaac, but like a lot of people get slack from people in the group. It's more of like resentment. Like whenever there's a couple people in the group, I'm not going to name anybody, but they're just haters, like they see people doing really well, and then they just want to bug them and like just basically like say things to to annoy them or or make them not want to share. So if you guys, as you guys have seen, Isaac doesn't really post profits in the group anymore. There's a lot of people in the group that are consistently profitable, but they don't post profits in the group anymore, because you have like a couple people in the group that will be bugging these people like at all hours of the day, asking for like proof of their profits, or like say that they're flexing or stuff like that. So I know you guys want help from Isaac, but I don't think I don't think Isaac wants any more attention. So you know, like I told you guys before, if you guys have questions, put your questions here in the chat. Don't private message people, because people will get annoyed, especially if they're getting like 100 messages a day from like random people in the group asking for like proof of profits, or telling them that they're just flexing, that they're trading demo and stuff like that. It's just crazy, because like we're all here trying to help each other out, but we have a couple people in the group that do that, and it's just toxic, right? So like you don't see people posting profits in the group. You don't see Patricia posting profits. You don't see Maddie posting profits. You don't see Isaac posting profits, but you know, these people are profiting every day. Even myself, I stopped posting profits for like a couple of days, or like for a couple of weeks, because you have people in the group that are just, they complain about every little thing, right? Like people complain when I trade during Asia, so I don't even post profits during Asia anymore. So I know a lot of you guys wanted like interviews with like the best traders in K2, but I don't know if we're going to get that, because a lot of these people don't want unwanted attention, and it's not their fault, right? It's just you just get some people that are just I don't know, should probably just kick them out of K2. That's really what we should probably do. Yeah, I mean, eventually it's just it just really throws people off. And the thing is, it gets away from like people's focus. Like Isaac was getting so like Isaac, Maddie, and other people, like they get so many messages that they can't focus on their own trades. Like today, Maddie was kind of upset because one person was like messaging him, and he like missed out on a trade. He ended up only locking in like I think 200 profit, because he couldn't close his trade out because somebody kept texting him, someone in the group. So Maddie got upset. He was like, man, like I should just block this guy. So there's certain people in the group. I'm not going to name anybody because I don't want people to be mad at these people. But I mean, it's just some people's personality. Sometimes they're just haters. So I mean, it is what it is, and we'll try to get across it. But you know, Isaac, Patricia, everybody's still in the group. It's just that they're not openly posting profits because they don't want to be bugged by so many people in the group. So if you guys do have questions for certain people, just tag them in the public group, and then either they can answer your question or somebody else can. But eventually, you know, they're just gonna go MIA. That's kind of how a lot of people have. If you guys have seen the group, there's not as many people posting the bigger profits anymore, because they just keep getting bugged by everybody. So just keep that in mind. But no, I do see I do see why you guys want help, but you know, eventually it'll come once everything kind of settles down. Anyways, back to the questions over here, and I just want to like put that out there because I feel like a lot of people don't get it when I try to remind people not to privately message these people, because it's just unneeded stress, right? People want to focus on trading. They don't want to have to prove themselves just because they're posting, you know, some pretty big profits every time. All right, so let's see another question from, let's see, Black Jedi. Black Jedi is asking, actually he's not even here anymore, but he was basically asking, good evening, Sean, do you recalculate your lot size depending on the move and risk, say 1.5% risk? So I do about 1.5% risk per trade. So if the stop loss is wider, I use a smaller lot size. If the stop loss is smaller, like 300 pips, I'll use my normal lot size, which is a 10 lot. So if it's 300 pips, I'll use a 10 lot. If it's 500 pips, I might drop it down to like maybe 8 or 7 lots. It just depends on the trade, and it's all based off stop loss. Scrolling down a little more, let's see. Dijon said, what about the instance where it'll be a perfect buy entry and 1 or 2 candles later, a sell momentum pops up? Would you close the trade out? So if it's a good entry, Dijon, I won't second guess it. I'll just keep it up there. And yeah, the OG SR is still up there, but I don't use it anymore because it's just one line, so it's not really useful. Let me scroll down a little more. Deshaun said if Asia wasn't so ass, I would have took the V3 that just popped up. Yeah, I wouldn't take it. You're looking at this one over here. And it's out, it's also at the sessions too right here. So I wouldn't take any buys right here. It's too risky. The New York highs at that point. Let me scroll down a little bit. All right. Dejan said just evade them. You'll be all right. They don't arrest you for at least 5 years. Right at that point, you'll just disappear. Okay, so Wesley did confirm there's a capital gains tax in the UK. I'm not sure how the tax system works in UK. As I recommended earlier, guys, you guys should probably check with I don't know what they're called in UK, but over here they're called CPAs, which is a certified public accountant. You guys probably want to meet with them to see what types of things that you guys can do to avoid your tax liability. Dejan said, so I file FTMO as self-employment. So once you start making like consistent profit on FTMO, Dejan, you can start a company like an LLC and you can tax it as an S Corp. So when you make profits, you funnel it through your business, and then basically all of your expenses, like say your K2 subscription, that's basically free because you're going to write it off. If you get a business vehicle, you can write that off as well if you use it for business purposes. If you get an apartment, you can write off your office space. If you pay for TradingView, you can write that off as a business expense as well. Your FTMO challenges, those are all write-offs as well. So like, since it's early in the year, you can start some sort of company. Well, you don't have to, but you can do a DBA as well. But if you plan on treating this as a business, then you can start an LLC and then you can tax it as an S Corp. That's what I do. So I have an LLC, run the profits through it. It's taxed as an S Corp because I'm the CEO of the company. So I pay myself a wage. So I give myself a W-2, and that's write off as well. So, and you know, this isn't tax advice, guys. It's just stuff that I've learned. I give you guys a book for this in the chat, so you guys can go and look at that. But yeah, I pay myself a paycheck. That paycheck's a write-off. The employment tax is a write-off. So instead of me paying like this big tax bill at the end, I have all these deductions. So I basically get all this stuff for free because I use it for the business. So, you know, if you like Rick, is Rick here? So Rick isn't here. Rick just messaged me this morning. He was like, hey bro, talk to my tax guy and I could write off all 30 of my challenges. So I was like, yeah, of course. So, you know, all those challenges that Rick was taking, and, you know, you guys know who Rick is. Obviously, he lost a lot of challenges in the beginning because he's just gambling. He can write all that stuff off. So he has a separate business where his deductions will flow to his, you know, his income tax. So basically Rick got all those challenges for free. So that's why Rick keeps trading all like risky, because he's writing off all the challenges. So that's something that you guys can do as well. And it's still early in the year. So like, say you guys do like 2 challenges this year, right? Okay, so say for example, and this is not tax advice, guys. I'm not a tax person or anything. I am an attorney, but this is not tax advice, right? I'm not giving you guys no tax advice, no law advice, none of that stuff. So like, say for example, you're doing 2 200K challenges, and each challenge is like about 1,300, somewhere around there. Or you do like 5 challenges, right? You fail them all. You're like down 6,500 in the hole. But say at the end of the year, you make like 100,000, right? Whatever, you make 100,000. Well, if you make 100,000, you know, depending on what tax bracket you're in, you're gonna have to pay X amount of tax. I don't know what the tax bracket would be for 100K. We'll just say like 20%, right? So you got to pay 20,000 in taxes. Instead of paying 20,000 in taxes, you're gonna subtract your FTMO challenges. So you do that, subtract 6,500, and your tax bill is a lot less than you would have had to pay. And then say you buy a car, right? Like I bought my Model X Tesla, and that falls under Section 179. You know, say for example, I made $1 million at the end of the year. Not to say that I did or I didn't, but you know, if I make $1 million at the end of the year, and then I owe like what, like 40K in taxes, So say I made it till the end of the year. I owe about like 40% taxes. I owe 40K. Right. If I buy a $40,000 car and it falls under section 179, I basically got that car for free. So that's why you see a lot of people driving G-Wagons around, Urises, Model X's, because it's a tax write-off if you use it for business. That's why I got my car. So, and that's why I'm looking to get like a G-Wagon this year if I could find one, decent price. Because there's different ways of doing it. But again, not tax advice. You guys should see a CPA. You just got to make sure that it falls under the parameters. So let me scroll down a little bit, see if I'm missing anything else. All right. So let me scroll down a little more if I'm missing anything. A lot of messages here. Definitely cap post. Yeah, Randy said I hate them sessions. Yeah, exactly. Dijon said K2 only doesn't work for those who don't pay attention. Yeah, which is definitely. Dale said, does FTMO give it 1099? Yes, they do. At the end of the year. You have to, well, it depends on how you register your account, right? For my account, they're registered to the business, so that's where they write it off to, or that's how they give your tax information. I mean, it depends if it's personal or if it's business, but yeah, basically 1099 for the most part. And even if they don't give you 1099, you can still put it under, your 1099 regardless. Dijon said, if you buy a car over 6,000 pounds, you get a deduction too. Yeah, that's what I just referred to. So if you buy an SUV over 6,000 pounds, GCV or whatever it's called, GCV, that falls under section 179. That's how I got my Model X. Talanji said, oh, pounds in weight, bro. Yeah, in weight. Talanji thought you're talking about pounds as in British pounds. Yeah, gotcha. Yeah, and Randy said it's different in Canada. Yeah, so every country has different rules with tax stuff. So you should definitely see a CPA for stuff like that. I mean, I gave you guys a book in the group, so if you guys want to go look at it, just go to the chat and just search tax-free wealth. I posted the book here a couple of times, so you guys can read this book here. It'll kind of teach you like a basic overview of the tax game. There's other stuff that you guys can look at, but that's a good starting point. But yeah, I think other than that, I think that's it. So if you guys have any other questions, feel free to drop your questions in the chat. We've been on the session for about 2 hours now, so I think it's time for me to take a break. It's getting super hot. We're having a heat wave here in California this week, so I got to turn on my AC. Starting to get sweaty here. So yeah, guys, I mean, hopefully this helped you guys out. I don't know if you guys have anything else to cover, but just a reminder, if your question doesn't get answered today, guys, we're doing this again next week. Let me check my schedule for next week. So for next week, I can hold the session either on either on Tuesday or Wednesday. So it looks like our mentoring session will be either on Tuesday or Wednesday next week. So I'll put a poll up in the group to see when you guys want it, but that's when we'll be having it. So I think that's about it for today, guys. If you guys have any other questions, feel free to email me or message me on Telegram. I'll be around. So if you guys have questions, feel free to reach out. Otherwise, I will see you guys tomorrow for the next live session tomorrow morning. So hopefully you guys got some value out of this. I'm here to help you guys out. I want to make sure everyone here is successful, just as everyone else in the group that's successful with trading. And yeah, let's have a great year, guys. So other than that, have a great rest of your night, guys. And if you guys have questions, feel free to reach out. Otherwise, I will see you guys tomorrow. So